How Jamie Dimon built Chase into the U.S. most powerful bank. The world has undergone a significant number of upheavals in the past few decades, as we are all aware. The global banking crisis that transpired after the 2000s was one of the most severe periods in the financial sector as the housing crisis intensified. The crisis resulted in the collapse of hundreds of banks. Nevertheless, one bank was able to generate profit from the circumstances that surrounded it and suffered minimal damage. The bank in question was J.P. Morgan Chase, and its CEO, Jamie Dimon, guided the vessel with precision. Have you ever considered the process by which he was able to acquire the esteemed title of the most influential financier in the United States? He has emerged as the most influential banker in the nation. Certainly, we should investigate. A legacy in finance. Dimon's grandfather, Panos Papademetriou, arrived in New York in 1941. He was able to establish a prosperous career in banking and ultimately become a stockbroker, despite having nothing at the time. He was capable of constructing himself from the ground up. His son, Jamie's father, Theodore, continued in his footsteps despite his initial intention to pursue a career as a violinist. Jamie Dimon was born on March 13, 1956, and his childhood was nearly flawless. In addition to attending private institutions, he enjoyed vacations in the Colorado mountains. The fact that Dimon had a childhood replete with Americana, a childhood that the majority of young people in the United States would envy, was insufficient for him. His objective was to surpass his father and grandfather in terms of income, and he was resolute in his pursuit of this objective. Dimon's early academic struggles. The adolescent Dimon was fully aware that his potential lay in the financial industry, as his father had done before him. Nevertheless, he would require enrollment in a premier institution to achieve success. Nevertheless, his application to Brown University was rejected, despite his considerable enthusiasm for the institution. Although this was a setback for young Jamie, who had grown up accustomed to obtaining whatever he desired, he proceeded on with his life, remaining resolute in his pursuit of success, and enrolled at Tufts University. He applied to transfer to Princeton University because he believed that Tufts was beneath him, as a result of his perception that he was a student of exceptional quality. He was once again met with an adverse response. Despite his conviction that he was too gifted for a conventional institution, he determined that the sole viable alternative was to become the most exceptional student at Tufts. This was because there were few remaining opportunities, as well as the fact that no Ivy League institution was willing to accept him. He made a significant effort to graduate from Tufts University with a summa cum laude degree in 1978, despite his sense of entitlement. As an outcome of this achievement, he was granted admission to Harvard Business School. Harvard and Dimon's early career moves. Following his validation of this self-worth, he enrolled in Harvard. However, he elected to dress in a manner that defied the conventions of professional attire, selecting instead to wear jeans and leather jackets. He persisted in his unconventional and inventive thinking, following the completion of his studies at Harvard University as a Baker Scholar. Although he received numerous offers, he declined them and instead began working for a family friend named Sandy Weill at American Express, where he received a far lower salary. This was a result of Dimon's ambition to create something, but also enabled him to bypass entry-level labor. Weill included him in his inner circle, where he negotiated transactions worth hundreds of millions of dollars on Weill's behalf. Dimon was capable of surpassing entry-level positions. Dimon's triumph would not be permanent, even though he had successfully achieved his objectives. Following Weill to American Express and commercial credit. Massive wealth creation, corporate interests, and excessive spending were the hallmarks of the 1980s. Dimon looked up to Weill as his mentor and aspired to ascend the ranks at American Express by following in his footsteps. Nevertheless, their accomplishments rendered them vulnerable to harassment by other members of the organization. Weill resigned from his position at the company in despair after the board of directors denied a significant agreement with Warren Buffett regarding a proprietary fund. Nevertheless, he firmly urged Dimon to remain in his position as Dimon had begun a family. Nevertheless, Dimon, who was loyal to Weill, resigned in conjunction with him. The turnaround at commercial credit. At the age of 58, Weill was perceived as past his heyday by the majority of individuals, and no one was interested in hiring him. However, Dimon and Weill worked together to develop a strategy for the situation. They would acquire a smaller company and utilize it as a platform to acquire a larger company within a brief period. They identified their target in Baltimore as Commercial Credit, a company that was experiencing financial difficulties. Dimon recognized the potential to reduce expenses and regulate the situation. The two individuals were compelled to rely on their resources and distribute 80% of the ownership to the general public due to the absence of investor support. Dimon, who was only a few years away from reaching the age of 30, and Weill were successful in convincing investors to contribute $850 million. Furthermore, before their departure, Weill appointed Dimon as chief financial officer and granted him substantial stock options, surviving Black Monday and building Citigroup. To achieve success, they reduced expenses, which included terminating 10% of the workforce on the first day. They were able to generate a profit of $100 million and an 18% return on equity despite adopting such a difficult approach. This enabled them to commence acquisitions. The market calamity of Black Monday, which transpired in October 1987, was unprecedented. Regrettably, this occurred before their actual commencement. On the other hand, Dimon and Weill capitalized on the opportunity to acquire additional struggling businesses and repurchase shares at a substantial discount. Dimon even went so far as to negotiate a contract to acquire Primerica, a company that was significantly larger than their own. Over the subsequent years, they established Citigroup, the largest financial institution in the United States. Weill served as its chief executive officer. He was able to facilitate the passage of the Financial Services Modernization Act, which enabled insurance firms and banks to merge, thereby establishing megabanks through his political connections. Rebuilding at Bank One, Dimon was compelled to devise a strategy to regain his position at the summit. The opportunity presented itself in the form of Bank One, a credit card behemoth that was enduring significant difficulties. Dimon assumed the obligation of reversing the company's fortunes after investing $50 million of his own money in Bank One. His decision to terminate 12,000 employees and close enterprises that were not meeting expectations during his first year in office resulted in a $500 million loss. Dimon, conversely, succeeded in convincing Wall Street, increasing Bank One's stock value. Dimon's capacity to make difficult decisions and remain resolute enabled Bank One to generate a profit of $2.6 billion the subsequent year. Taking over JP Chase. Dimon had established himself as a restorer during 2003 and Bank One was performing well. At the same time, JP Chase, another significant financial institution, was in quest of an individual who possessed Dimon's qualities. John Pierpont Morgan, a man who shared Dimon's viewpoint, founded the financial institution JP Chase, which had deteriorated and swollen. The bank's reputation was tarnished as a consequence of the Enron crisis in 2003. Consequently, the bank's CEO, Bill Harrison, initiated a search for a replacement who could restore the organization. JP Chase appointed Dimon as its CEO in 2004, following a merger with Bank One as a consequence of Harrison's belief that Dimon was the optimal candidate. Dimon's ascension to the top spot, the financial crisis of 2008. Simultaneously, Citigroup, the organization that Dimon had assisted in the formation of, was experiencing financial difficulties due to the leadership of incompetent individuals. The collapse of the housing market in 2007, which had a significant impact on Citigroup, was ultimately what caused the financial crisis of 2008. Nevertheless, Dimon's prudent decision to divert JP Chase from subprime mortgages resulted in the bank being in a more favorable position. Stanley Weill undoubtedly considered his decision to remove Dimon as an error, given the challenges that banks worldwide were facing as Citigroup's struggles. Dimon remains the sole individual to have endured the recession that commenced in 2008, as he is the sole major financial CEO to have done so. Dimon's ascendance serves as an illustration that with the appropriate perspective, there is no hardship from which one cannot recover. Dimon's resolve, his refusal to yield to obstacles, and his refusal to yield to challenging decisions serve as evidence of this. That is a lesson that every one of us should acquire. That's all for today. If you found this helpful, give it a thumbs up and subscribe for more. Let me know your thoughts in the comments below. Check out these videos for more great content.